basically, let me just quickly update the crew on the G20, Tim. First and foremost, trade talks are back on after 2 months of stalled talks. So we do have that ceasefire with China regarding the trade wars and the trade discussions and everything that's been going on over the course of the last couple months. Very similar to what we saw 6 months ago, Tim, with this. So I'm not kind of like the market today. I'm like, yeah, we've seen this before. But with a gap up in the futures market, it is going to impact triggers on the bull side. There's no doubt about it. It's going to impact triggers on the bear side as well. I'll just give you one quick update before I come back to the update to the G20. But take a stock like Charles Schwab here, Tim. Let's look at, and I'll just give an example of updating triggers here. So give me 1 second. So SCHW. All right, so you see this gap up here, okay? So that's the market kind of gapping up, and then you see it kind of settle in right here. If you drop this down into the daily chart, you had your trigger coming in. Basically, you had this bearish retracement coming in, and then you have this trigger that's now below this level here. But with the gap up, I actually like this even better here today, Tim. But this is the responsibility of the trader when you're looking at those scanner reports or when you're looking at any trade out there, to be perfectly honest with you. If it's still a good trigger, still a good trade, still a good pattern, still a good trend, you simply have to update your numbers. And when a situation like the G20 arises coming out of the weekend, and you have the entire market kind of gapping up a little bit on the overnight, you got to readjust those triggers. And so here on Charles Schwab, what I would do is I'd drop it down into that 30-minute chart, and I'd find that level that I'm comfortable still getting under. And for me, still underneath this little base here of $40, kind of where our original trigger was, that still kind of is legit, is still legit, but you certainly could get it underneath the low of today as well. So you certainly just have to update those triggers from a gapping situation. So I just wanted, and stop loss placement as well, typically when you see a gapping situation. But coming back very quickly to the G20. So first and foremost, trade talks are back on after 2 months of stalled talks. Number two, we are delaying the 25% increase on 300 billion worth of Chinese goods. Huawei, and this was kind of the shocker. Everything that I've said so far was completely expected by the marketplace itself. But Huawei can now purchase intellectual property products coming out of the U.S. And so that was a little bit of a gift we gave China, gave Huawei. And Huawei does a lot of business with U.S. technology companies, a tremendous amount of business with those the Microns of the world, the Intels of the world, the Broadcoms of the world. And so you should see a big impact there. Now, Huawei can't sell us products. They can't do that, but they can purchase our products. So that was an update. Also, China agrees to buy more American goods coming out of the agriculture community as well. And so you had some positive news coming out, but I think, I can't remember, was it Chinese Daily? I can't remember the newspaper that came out this morning. And I think it sums up it, and I want to get you and Mark's take on this, but I think it summed it up very, very, very nicely. The Chinese newspaper basically stated as this, that while there's a greater likelihood of a deal, there is still no guarantee, and that the road is still very long to travel here. And I think that threw a little bit of cold water on kind of the talks coming out of the G20. But I also think that, summarizes exactly what everybody in the market thinks today. We've been here before. We've seen these headlines before. It's par for the course. And so I'm not really taking that much positive out of what happened with the G20, just simply because we've seen it all before. But it doesn't change the fact that the market gapped out of resistance. And as long as it plays defense above resistance, I think you got to be some degree of bullish here. More than slightly bullish, some degree of bullish.
Several things that come to mind reacting to your statement. Number one is I think you were dead on with all of the points of what we expected. They ended up coming through to fruition. The Huawei thing obviously was the one wrench here that we weren't expecting. I'm not impressed by the price action here this morning, Matt. In fact, it's got a buy the rumor, sell the news type of feel to it for me on the intraday. We did gap out. Now we are showing weakness since the price opened, since the market opened. Well, 29.60 is the line in the sand for me that if it backfills the entire week here, I'm probably just going to focus on theta fading, maybe even some of those bearish retracements personally, Matt, because the price action is not showing me carry through or bullish momentum or bullish sentiment out of the traders here that opened up and had to use their money today. And so I've got concern. I see red flags in the market right now.
Well, let me give you a couple more red flags just to go on that, Tim. I mean, economically, we did have some economic news come out last night and today. Chinese PMI report, which is a manufacturing report, hits recessionary levels yet again, came in at 49.4 versus an expectation of 50.1. In the UK PMI report also came in at recessionary territory. Back-to-back months for the UK manufacturing data came in at 48.0 versus an expectation of 49.5. And for the halftime crew out there, anything underneath the 50 reading on a PMI report is recessionary indicator. And then here's what's interesting, Tim. The United States came out with their PMI report right here, and it was actually a positive, and it came in at 51.7 versus the 51.3. So the U.S. is still king of however you want to consider what's happening from a global economic perspective. But even though it was a positive report, you really couldn't break through this intraday resistance period at 2980, which is very concerning on the backs of those two negative economic reports coming out of China and the UK specifically. And then right here on the cash open, you just see the traders lock in profit coming out of that. So yeah, I mean, the economic analysis, the technical analysis, all kind of lead to that conclusion that you're not seeing a lot of strength coming out of what happened with the G20.
Mark, red candle up on a gap out that hesitates here. Obviously, we're still above all the moving averages. We're now heading into July. We've got earnings season upon us, the June trade war stuff. This G20 thing was everything everybody was waiting for. Positive resolution. I would have expected better price confirmation and follow through. Marky, what's your take over there?
Yeah, I don't think anyone didn't think that there was going to be good news this weekend. I mean, I don't think this comes as a surprise. You know, I don't have a whole lot to add to what Matt said. You know, it's like we were joking before the meeting is like, well, now all the market has to do is focus on crappy negative guidance and crappy economic reports. Like, what's the market going to focus on? What's its excuse? What's its catalyst? I mean, hope of the Fed cutting rates and hope of the positive dialects what sent the market up, you know, the last 3 weeks. Mm-hmm. What's going to take the next leg up? I don't know. I don't see catalyst.
Cody called me on Saturday as he was getting ready to do the Forex report, and he wanted to get my take on the G20 reaction. And I said this to Cody. I said, Cody, my take on it's very, very simple. A lot of the market expected positive news coming into that, but the positivity is going to be limited because a lot of it's already baked into the price, right? And that's kind of what you're seeing play out today off the futures market is. There wasn't a lot of surprise here, guys. I mean, all the news coming into the G20 was that they were going to have a ceasefire, and that's what they had. They had a ceasefire. The only real surprise here was Huawei, purchasing U.S. products. That was really the only surprise here, outside of Trump's meeting with Kim Jong-il the second or the third. I can't remember anymore, but that was really the only surprise coming out of the G20. There was no surprises economically here. The only surprises were political.
Yeah. And right now it's going to rest on the laurels of the price action. To me, again, like I said a minute ago, 2960 is going to be significant because, Matt, that's the old resistance, new support. And on the intraday, you're even seeing a line in the sand form here on the 30-minute chart. You'll see that rising moving average. You've got old resistance levels back there. And that was the support point on the futures market on Sunday that we came into. Here we are, guys. I'm going to ask you by the bell, if you close below that, do you expect a deeper retracement through the week? Does that matter to you as much as it's mattering to me right now, Matt?
It absolutely does. I mean, when you have a felt support level, typically you go find the next level of support. You're like stepping down the stairs. And this resistance level, Tim, that's the all-time high resistance level. Mm-hmm. And so when you're talking about this resistance level at 2960 and you gap over that, and look what happens on the gap. You gap over that, immediately retrace back down, and then what happens here? Well, right here, you start having that negative type Chinese news come out, and yet the market held its support level at 2960. So and guys, this Chinese PMI report 2 times in the last 6 months has caused a lot of volatility on Sunday, and you saw that start to occur here, but yet that technical level holds, and then you start rising back up, and now you're retesting that. So yeah, if you close underneath 2960, I do expect lower prices coming into Tuesday and Wednesday.